Hi, everybody. This is David Skarica, and this is another one in our series of interviewing special small cap opportunities at Addicted to Profits. And today, Dolley Varden Silver Corp is the company. The ticker is really easy to remember. It's DV on the TSX venture, so DV.v. And yeah, we're going to hear a little more from the company right now. And they'll tell you about maybe what they're doing, this and that. And we'll also talk about, the kind of macro outlook for silver. And one reason I like the company a lot is I know a lot of you know I am more bullish on silver than gold. And it's tough to find pure silver plays in the junior mining industry. So I'm always kind of looking for them. So welcome. Tell us a bit about yourself first, and then maybe to dive into what the company's up to and what you're looking to do and say in the coming months.
Right on, David. Just wanted to start off by saying thank you so much for having me. It's a pleasure to be on. A little bit about myself. I've been working in the junior mining sector for 17 years. So I cut my teeth on a project, a gold project that went from inception into a $1.4 billion market cap. We took a mine into production, and that's really led me to being at Dolley Varden today, because what I witnessed there was I witnessed this gold bull market that started in the 2000s, that peaked out in around 2010. And what I witnessed there was the silver price outperform gold in a very short period of time. So as we moved into this new bull market, I wanted to position myself and my shareholders into a silver company that could deliver those types of outsized gains. And you mentioned the rarity of a pure silver play. You're 100% right. Most of my competitors they report silver equivalents. So they're really base metal projects that have a silver byproduct, or a gold project that is 50% silver. But we here at Dolley Varden, this is a pure silver play, and it's in a safe jurisdiction.
Yeah, well, actually, what I'm going to do, can you put my screen sharing on just for a second here?
Absolutely here.
Yeah.
There you go.
Thank you very much. So yeah, what I'm going to do here is show the silver gold ratio. And it kind of shows what you talk about here. Like, if you go look at 02, 03 to the 2007, 2008 bull market, silver really outperformed. And then after everything bottomed in the 08 crash, silver outperformed into, the 2011 top. And then since the crash of the markets early last year because of COVID, silver's again begun to outperform. So I totally agree with you that, like, for example, if we talk about gold, I don't know, maybe going to 2,500, there's a very good chance that silver would go to 50 in that scenario. And you're talking about silver being a double from here, where gold, that would be roughly a 40% gain. So David, I'm 100% with you. And go look at those last two cycles, roughly, 03 to 07, or 08, kind of a double top there. That was 4 or 5 years. Then 08 to 11 was 3 years. And we're only a year into this. So we could see another, I think, 3, 4, 5 years of this outperformance.
And looking at the bottom of this chart here, going back to March of 2020, the silver to gold ratio went to 125 to 1. You needed 125 ounces of silver to get 1 ounce of gold. But if
all-time low, all-time high, by the way, on that ratio.
Yeah,
I'm going to reverse it right now.
So right now, I think, as the states here, we're at around 75 to 1. Okay, so we've come off significantly. But what's happening in the real world, David, in mining, is for every 1 ounce of gold that's being produced, 8 ounces of silver are being produced. So a lot of people who've watched this ratio historically talk about, silver getting back to like a 15 to 1 ratio because that was a sort of historic metric. But in the real world, it's really 8 to 1. So we've got a long way to go. And again, I'm in the camp where I look at all other asset classes, and they've all taken out their old highs. So for example, the 1980 high for gold was $800, $887 an ounce. Well, what we've seen here in 2011, we saw gold go to 1900. We've seen it go beyond 1900. Silver is one of the few commodities or asset classes that haven't taken out their 1980 high. In 2011, we got up to about $49 an ounce. So we've got a double top there. But I'm in the camp where it's inevitable that we get $50 silver. And like most things, when you break through that triple top, we'll probably see a move to 75 or 100.
I actually have a technical term because I do a lot of technical analysis. I say there's no such thing as a triple top.
Agreed.
Usually there's a double top or head and shoulders or something like that. Very, very rarely do you get a triple top. And see, again, if you look at longer term in this chart, I know it was painful, the 2010s for silver, but it really looks like, you bottomed. The absolute bottom was early 90s, but really inflation adjusted, it was 01. And you really had this 10-year move higher. And then you had this consolidation that was roughly 5 years, and then, bear market, which was 5 years, and then a consolidation. And now it looks like, kind of looks like we were, maybe in the early 2000s, where we've had that first move higher off the bottom. We're consolidating something like we did, say, maybe in 04. And then we'll have this next move higher. And what's interesting is it's not just gold. Like if you go look at these other commodities, like look at copper, all-time high was about $1.50 at that 1980 top in commodities like you're talking about. And then you can see it's over $4 and went to $4.
David, can you pull up gold? I just want to make one point here. And so, as this chart shows, from about, call it 2012 to 2019, gold was in a range. It couldn't get above 1370. And then when it did, we saw in about a year, it went up about 50%. It went from around, call it $1,350 to $2,050 an ounce.
Yeah.
We saw silver do that same move in 6 weeks last summer. And that really articulates the point that when silver moves, it moves there. What took gold 13 or 14 months, silver did it in weeks. And so, silver finally broke out of its, 6 or 7 year range, which was, call it, $12 on the low end, $20 on the high end. It breaks above that, it moves up to 30. So I'm convinced once we get through $30, it's going to be a tear up to 50.
Just so you know, on that silver, I bought in our newsletter, we bought SLV calls and calls on AG, on First Majestic, the day it bottomed. And the reason I did that was quite simply the gold to silver ratio going to that 120 that you talked about it,
Well, what's interesting, in that same moment that you made that decision, I went out to get some physical. Okay, I went out and I picked up some physical silver. Now, the quote on the digital price the day I bought it was $13.
Yeah,
it went to just below 12, but the day I went in to pick up my physical, it was $13. Do you know what I paid per ounce, David?
Oh, what'd you pay per ounce?
18.
18.
18. And for the digital market, the paper market said 13, but to get physical, I paid 18.
I think when I looked at the premium of the SLV calls I bought, it definitely, let me go look where the SLV was again. It definitely wasn't priced. I think it was 12 was the low. Yeah, it definitely wasn't priced at 12. It was priced more at like 13, 14, but definitely not as, a big as, as a spread as the physical, So
can you pull up DV again just for a second?
Yeah, that's an interesting chart as well. Once again, I got to make it a shorter term chart, but so David, what I find interesting about you guys is this resistance at, again, another triple kind of top at $1,
So David, just so you know, I came in and I took over as CEO February 2020. So okay. I was really deliberate in my timing. In Canadian dollar terms, we were trading at around 24 cents a share. As you could see, with some management changes and some different choices in terms of the way we approach exploration, we had a very successful first year. We enhanced our treasury. I raised $27 million in accretive financings, starting at 30 cents, the last one being at $1 a share. So we protected our shareholders with non-dilutive financings. So we've got a healthy treasury today. We've got over $20 million in the bank. We have almost 50 million ounces of high-grade silver in the ground. And we're on a path to potentially double that. And we're in a very aggressive drill program right now. We'll have a results-rich Q4 and Q1 coming up. And, we've got a great team, a high-grade project, and we're in an area that's hosted some of the largest and richest gold and silver mines in the world. So
yeah, I'm looking at. I've got that up right now, and you can see Newmont, Teck. You know, a lot of the big boys have mines in this area.
So they've blessed it. You know, like in the north of the area, you've got these rich copper mines. Once you get into the middle, where you've got the Skeena, you've got you know, lots of gold endowment. And then as you go further south, we're in a different type of system here, and we're seeing this high concentration of silver. And there's a lot of similarities between the Dolley Varden project and Skeena's Eskay Creek. Eskay Creek, David, produced 200 million ounces of silver at over 2,000 grams per ton. So it's one of the richest silver mines on the planet. And that's the type of potential we have. Now, one other thing, Hecla, which is one of the larger silver producers, they're a large Dolley Varden shareholder. They're our second largest shareholder.
Okay.
They also have a big land position just to the east of our property. And back in 2016, they attempted a hostile takeover of Dolley Varden.
Well, I was just going to say, if you guys really build up the resource, that's probably your perfect takeover partner. But of course, you'd probably want to do it at a lot higher price, you know.
The key for me is, I think we're in the early innings of the silver price. I think we're in the early innings of our discovery potential.
Yeah.
And it's my goal to just bring maximum value here with the drill bit. But we're also on the M&A side, we're looking for strategic opportunities in the area and beyond, where we could build up more silver ounces in an accretive way.
Okay, so just tell me, because you mentioned a little bit about the drill program, and I think really that's a good way to finish off, because we talked about the technicals, we talked about your location, maybe talk about the program, you know, what your budget is, how much you're looking to drill, you know, the time frame, etc.
Sure. So essentially, we've got like a twofold strategy. So the first aspect is finding more silver around existing mines. Okay, and we've been very successful at that in the past. And then the second point is to go out and make a new discovery. So we're about 7,500 meters into a 10,000 meter drill program. So okay, we're 75% complete, and we haven't put out any results yet. So I anticipate as we get into the latter parts of September, into early October, we'll have drill results, and we're going to continue reporting drill results right into Q1. So it's a 10,000 meter drill program. It's fully funded. We've got over $20 million in the bank, and we haven't put out any results yet.
And by the way, that's the whole point of this service, is that when you have the results, I'll be more than happy to interview you, and we can discuss them and the whatnot. And it looks like here I got the resources up for those companies.
So this is the 2019 resource estimate. So this tells you we've got 44 million ounces of silver in a compliant resource estimate. And of the 44 million ounces we have, 35 million of those are in what's referred to as the measured and indicated category, meaning we've done a lot of tight space drilling. So we have a lot of confidence that these ounces are there. Yeah,
and I just noticed that your grams per ton is actually the highest of all these companies that are listed.
Yeah. So these are actually our 4 mines here that are listed.
Oh, your 4 mines. Okay, sorry. Yeah. Oh, but the Dolley Varden one is the actual, looks like it's the richest one.
So the Dolley Varden mine has produced just under 2 million ounces of silver. Okay. And the Torbrit mine, which is the largest mine on our property, produced 18 million ounces in the 1950s. And, you know, it's got 25 million ounces indicated right now.
And by the way, I got to say, because I went on it right before we did our interview, you do have a great website as well. That's got the whole historical, you know, not many juniors put the whole historical pictures of the mines, etc. So it's an easy read. It's not overly technical, which I know a lot of my investors are retail people, so they don't need to be bombarded with complex geological terms. So I'll put a link to the website as well when I blast this out this week.
And David, on that note, like we're doing 2 events this week where We're going through the project, the presentation. We're showing you where we're drilling and what it will mean if we're successful. So there's a couple events, one on Wednesday and one on Friday. So if your audience wants to click on, there's links to these different presentations that we're doing this week.
Yeah, I'll definitely put those links out. Actually, what I'll do, if you can give me those links, I'm going to blast this probably Tuesday. So I can put a link to both of those, and like definitely the Wednesday one, and then probably the Friday one. I put a link.
And David, we're quite active on Twitter, so pictures and information and links. But we'll get all.
Well, let's do this right now. I've got about 1,800 followers on Twitter, so I'll add you right now.
So we're Silver Varden.
Silver.
Varden. Silver Garden would be actually quite. I like that one.
Silver. Sorry, what?
Varden. No, but I was just joking that Silver Garden's a pretty good one.
Silver. Okay, there you go. Oh, yeah, you guys follow me, so there you go. So now I'll follow you, and we're good.
Hey, David, thanks for taking us to 1,300.
Yeah, there you go. No problem. Yeah, I always actually have a thing about those even numbers. That when I see something, I always got to follow one to be even numbers. So, Okay, so I'm gonna stop the share, and we'll just finish this off now. Yeah.
Okay.
So So thanks for having. Thanks for coming. And like I said, hopefully, actually, in the next few weeks, we'll have something to talk about.
Perfect. I look forward to it. Thank you for your time. Yeah.
Yeah. Take care.